Hello and welcome. And yeah, thanks Ajay. Fireside chat with Ajay has been pushed to the last session to make it on time. We'll be on time. So next 40 minutes, is sky the limit for Indian markets? I have fairly simple questions for Big Bull and Akash Prakhash. Here are the rules. Certain questions are both for you, both will answer, and certain are individual questions. Let me first question is for both. We'll start with Mr. Jhunjhanwala. Is this how important is government for the market? I would not name, but there are certain stocks which for the past 3 decades have been doing extremely well, irrespective of which government is in power. Sir,
No, I
Rakesh
think
sir.
no, governments may not be important for specific. One thing, Mr. Bandhopadhyay, I would like to say that we don't believe in your rule. The only rule is there are no rules.
Okay.
Please. And second thing I would like to say is that government is important for the general economic growth. If India doesn't have growth, Titan is not going to be able to sell jewelry. Titan is not being able to sell watches. Asian Paint will not be able to sell paint. So governments may not be important for specific companies, but I think they're extremely, extremely important for the general economic growth on which the prosperity of every company in this country depends. And if
Yeah,
they do not create the ease of doing business, we could never have exported the amount of software that we're exporting. So we cannot underplay the role of government for the prosperity of every company and for every Indian.
Yeah, Akash. This session is more outside in, inside out, because you are sitting in Singapore watching India, and Mr. Jhunjhanwala is in Mumbai. So tell us your take, role of the government for the market.
No, I totally agree with what Rakesh just said on this. I think that ultimately when you're buying into India, you're making a bet on the next 5-10 years of growth, if not longer. And obviously, if you don't have confidence that the government can create the conditions to deliver high growth, then that has an impact on what are your expectations for earnings for the broad market and the expectations of how companies scale up. I think Rakesh is 100% right that it may not affect an individual company specifically so much, but even there you could argue most companies do get infected. But definitely, if you're taking a view as how much you want to invest into India, which is what a global investor has to do and decide an allocation, the conference, their conference on the government is critical. I totally agree with Rakesh.
And
Thanks,
I would
Akash.
like to add that,
Yeah, sure.
we should realize that it is we who create the government. It is our society. It's our elected government. I think what every Indian does, is extremely important. Not only
Sure.
from government point of view, but from us as a society.
Yeah, that's a very critical input. Now, Akash, I was told somebody said that at Sindham College you used to play cricket. So this is not a googly, but tell me, I follow your fortnightly column in a National Business Daily. Till recently, you were not as bullish as on India. You are, I would call it even bearish. But certainly for the past few months, I am reading your columns. Of course, you are hedging your bets, but you are extremely bullish, even competing with Rakesh Bhai on bullishness on India. So what is this behind it? The budget?
No, it's not just the budget. The budget is an important part of it because I think the budget should. I think really is to change. I mean, a lot of the points the chief economic advisor made in this event itself. I think there's been a radical sea change in the attitude of the government towards business, towards trying to. I think economic growth, is back to being the number one agenda of the government. I think they're being very smart in terms of how they're approaching industrial policy. I think they are recognizing that there is no trade-off between growth and inequality. And I think they've recognized that that they need to get out of the way. And I think the point that the CEA made, which is that you need to create the environment that the private sector regains confidence. And ultimately, investment is an act of confidence, private sector investment. If you're going to put a plant on the ground, you need to have confidence. So I think the government's talking, the prime minister talking about we respecting the private sector, the lack, I think a little bit of of some of the persecution that some of the complex that some of the private sector companies have started feeling, animosity, etc. I think all that is tone down. The Prime Minister set a very positive tone saying we want to respect the private sector, we want to encourage growth. So in that will encourage private sector investment. And the second piece of the equation, which is productivity, I think all the stuff he talked about, privatization, asset monetization, the insolvency and bankruptcy codes is all going to massively encourage productivity. So I think there is a very significant change in approach of the government towards capital. We're moving back to being more right of center from being almost left of center in the last 5 or 6 years. We're looking back being pro-business, pro-capitalism, let the economy grow, let people make money, and that will trickle down. And if the country does well, that money will be reinvested back into welfare and improving the lot of the entire economy. So I think it's a sea change in government, and I think I'm starting to see the impact on private sector entrepreneurs, the thinking, the approach, the confidence, and that's why I've become a lot more positive.
Okay, it's a very, very apt sum up. Now, next question is to India's Warren Buffett. Is this, in the past also we had historic budgets. 1991, economic liberalization, 1997, the so-called dim budget, and now we have the boldest ever, which spoke about privatization, quote unquote, which the chief economic advisor said now. Rakesh bhai, tell us, do you see anything can go wrong even after this budget? Because again, CEA was talking about the implementation from your experience.
See, I like to make 2-3 points. Yes. The first point is it's not all about the budget. I think there are various things like the IBC, the RERA, the GST, which has been done earlier in the last 5-7 years. Now, what the budget tells us is that the government, with its brutal majority in parliament, is absolutely sure of doing second generation reforms, and they are determined. So that time has come. I think India is now going to face the best part of the second generation of reforms this country needed. Second thing is, in 91, when we did the reform, it took time for society to absorb those reforms and for those reforms to benefit the society. The real growth came 9 to 10 years later. But I think these reforms we are well prepared for, and they are going to have an immediate effect on the economy of this country. That's what makes me very bullish. And also the fact that the cost of capital is so low worldwide. And despite all the inflationary fears, I feel that in Japan, they kept printing money. Nobody has printed money the way Japan has printed. But there is no just inflation. The inflation just does not come. So in aging societies in the Western world and Japan, we are not going to have inflation. And that is going to lead to low cost of capital, and that's going to lead to a flood of capital into this country. So you have reform, you have capital, you have inherent skills. People forget that, we were 40% of world GDP in the 17th century. I think we may not go to 40%, and I don't know why you have read Kickstarting India's Decade. I think more apt word would be Kickstarting India's Century. Because once change takes place and the skills and the abilities of the Indian people are released, it's a tsunami. Don't forget one thing. I spoke to a group of NRIs. I told them, sir, what you have achieved, your genes are Indian. Don't forget that. What America gave you was a platform. What I envisage is that India is going to give entrepreneurship and Indian skills a platform. And the energy that is going to be released and the growth that is going to be released by that platform and the inherent skills and the inherent democracy is unimaginable. And I'll give you an example of my experience in life, that when I see a company, I'll give an example of Escort. It was a written-off company. I made some of the biggest money of my life in Escorts. Why? Because I recognize there are inherent assets in Escorts, right? And now, with the right attitude, those assets are going to be better used. The change has exceeded all and everybody's expectations. And when the threshold of change, there are always difficulties, right? But when things fall together, the growth that can become, I think, is beyond our imagination. It's my prediction by 2025-26, we are going to have 10% growth, which is at least going to continue for 2 decades.
Yeah, I will come to those.
I have prediction in 25 years, we will exceed China's GDP. I reserve the right to be wrong.
Yeah, so budget is not a one-off event, it's a climax of a series of events
So the
that the
climate
government steps.
Bandhopadhyay is the first time in the history of India that in the same budget session, our investment star insurance, the CEO was saying that let's discuss these new rules and the new FDI policy in insurance. I said, sir, it will take 6 months to be notified. So let's be patient. But sir, the insurance bill has been passed in this session of Parliament.
Great.
It will
So
be
that's,
law in 15 days.
so
That
this
is the
is not,
speed at which government is acting in its intent, despite all opposition.
so this is
That
not
speed,
India's
that
decade,
gives
this is
you,
India's
it may
century.
not give you a message, Mr. Bandhopadhyay, it gives me a message that government means business this time.
Absolutely. So this is not India's decade, this is India's century. Now,
Absolutely.
Akash, yeah, Akash, you tell us how critical is US for these markets, Indian markets? Because, is it the US bond yield and that's more important, or is the Indian fundamentals? When you bank on or invest in Indian markets, what do you look at? It's US decides that, or it's India, what's happening in India?
No, I think, I mean, from a short-term tactical point of view, the US does matter in the sense that, what happens, emerging market flows and stuff like that. But in the point Rakesh is making, which I totally agree with, by the way, I mean, I think he's more bullish than I am, and I hope he's right, because frankly, if he's right, it's great for all of us. And I think, and I can see where he's coming from, because, he has the type of companies he talks to, and I think the insight he has is unique. So, I think long term, we on both of us are on the same page, which is that we've gone through a period of 7 or 8, or almost I would say a decade now, where India has significantly under-delivered its promise and its potential, right? For various reasons. I'm not blaming one government or the other government, politics, for various reasons. And partly we've gone through a systematic cleanup of the Indian system now. Look at the bankruptcy code. Look at GST. We've taken. I think we've taken a lot of pain in the economy the last 5 or 6 years to clean up the system and fundamentally, I think, improve the long-term fundamentals, right? So I think the point Rakesh is making is that now the time to gain, to reap the benefits of all these changes which have happened is coming now, number one. And number two, and I'm repeating my point, I think there is genuinely a change of thinking at the government level. I mean, undoubtedly. I mean, I've not seen, I mean, for the same prime minister who used to be worried about Soot Boot Ki Sarkar is now coming on the floor of parliament and saying privatization is good, is saying private sector is good, letting people create wealth is good. This is the same government which was on, at least on paper from an external perspective, was quite rattled by the Soot Boot Ki Sarkar comment made by somebody, 5 or 6 years ago. The government now, I think, is very unabashedly saying, no, if we want India to progress, the private, like the chief economic advisor said, it has to be led by private sector investment. It has to be ethical wealth creation, which I think is a clear message. So I think there is a real chance that a lot of growth will be unleashed in India. Productivity will massively improve. I think that's the long-term bet. Tactically, yes, if the US goes through a problem short-term, if bond yields go to 5%, 3%, 4%, will emerging markets create a problem? Yes, short-term, that could be a tactical problem. But frankly, if Rakesh, and to a certain extent, if I'm right, any short-term tactical correction like that is actually a buying opportunity for India. So frankly, if we are Indian investors, and if we are long-term investors, which we are, it's not a bad thing. It'll give us a chance
Okay.
to buy.
Okay, so it's an India story. There is no debate on that. Rakesh bhai, one of your recent interviews on with the TV channel, part of it went viral all over the place, where you're talking about there are people talking about liquidity driven rally. It's not liquidity driven. It is the fundamentals. Can you tell us a little more on that? You have already explained a lot of things, but little more on that, because people loved it. I think millions of people, lakhs of people, it was that WhatsApp was running around. Your talk on your annoyance with people who are talking about liquidity driven, and you are saying it is fundamentals.
See, let me tell you one thing about liquidity. That markets go up because there are more buyers of shares than shares available, right? Or there are paucity of sellers. So you cannot have, it was the first time that after the second and third quarter results of the current financial year, the earnings in India was upgraded. For the last 5 years, after every quarter, the results were downgraded. And see, US interest rates will come and go. That's not the only cause of the rise in markets. Most people don't believe in this rise. They are influenced by this media, this COVID, and this is going to happen, and businesses are going to fail. But you ask Mr. Kaval, his NPs have not gone up abnormally. So according to me, the realities are far different from the perceptions. And maybe, the index is today 14,800. It may have been 14,000 if the US liquidity was not there. It has contributed to some extent to the rise. But the basic increase in rise is the earning expectations, and the earnings are much greater than the expectations. And and this is how typically a bull market starts. That there is an event, right? That event is a very bearish event, and market goes down abruptly and goes up abruptly, and everybody is so shocked by the bearish event that the mind cannot adjust to the rise. That is what all this behavioral science. I know people write 1,000 pages books. This is the behavioral science I have learned in life.
Okay.
Right?
Akash,
And as long as you don't accept as long as you don't accept the market is a treacherous animal. It's going to keep tricking you.
absolutely. I mean,
Yes, liquidity has contributed to the rise, but I think it has contributed to 10% of the rise. And I think the more interest rates go up in America, the more will be the interest in India. Because you're not going to have the kind of growth that and the potentiality that you are going to have in India. And forget US liquidity, sir. Mr. Bandhopadhyay, don't forget, we are living in a country where you save $750 billion a year. We have 5% of household wealth as equity. America has 31%. They have the highest level of profits to GDP ever. We have the lowest level of profits to GDP. That is a contrast. So don't think we are an American tool. And our
okay.
market is going up because America is going up.
Okay.
There are
Akash, sorry.
fundamental
Yeah.
reasons why these markets are going up and are
Akash,
going.
yeah, Akash, you spoke about the change in government. Everything has changed. The body language, the Sood But Ka Sarkar, it was so embarrassed for being called like this. Now it actually is becoming a Sood But Ka Sarkar. India now embraced capitalism. Now tell us, sitting in Singapore, how do you see the governance structure in Indian companies? Is it also changing in sync with times?
Yeah,
Or
I
there-
think. I think governance structure has improved significantly in India. For two or three reasons. One is that we've gone through the last, since the ILFS NBFC crisis, there's been a severe crunch on the balance sheets of corporate India, right? The balance sheet recession. In most industries, the weaker companies, the weaker balance sheets have got decimated totally. Either they've been driven out of business or have been driven into irrelevance. And there are many promoters and business houses of repute which are no longer relevant from a market perspective and are barely relevant from an economic perspective. So there has been a massive cleanup among corporate India. Whether they like it or not, it's reality, number one. Number two, look at the dispersion in the market itself, right? In the same sector, look at the dispersion in multiples which investors are assigning to companies which have good governance, those which have mediocre governance. It's massive divergence. So the market really is paying up for good governance, and it's, I think, very obvious to any entrepreneur that if you're in the market cap game, which ultimately most people are in the market cap game and wealth game, that if you're not straightforward and don't have good governance, the market is not going to pay you for that. Number two. Number three, and this is something I think Rakesh has spoken a lot about also, look at the big industrial houses in India, Tatas, Mahindras, to a certain extent, Mr. Birla as well. They're all talking capital allocation. They're all talking good governance. I mean, look at Chandra. I know Rakesh is a big fan of the Tata Group and Mr. Chandra, rightly so. But look at even, he came at the Kota conference. I heard him talk there in a group meeting, talking all the right things in terms of capital allocation, cash flow, ROIC. Look at Anish in Mahindra Group. He's talking all day about capital allocation and return on capital. Even Mr. Birla, I heard him at the Kota conference. He's talking about capital allocation, cash flow. And this is percolating down all the way from top to bottom. So there's, again, a radical change in corporate India, in my opinion, also among the larger companies, at least, because of the huge crunch on balance sheets, because of the difficulty of raising, raising capital, given the balance sheet constraints that the system has gone through, and given the disproportionate upside the market is giving you if you have good governance and good capital allocation. I think the message is very clear to corporate India, and I feel there's a huge relevance. And also, I may add one final point on this. I think the rules with SEBI, the institutional, with the giving them the majority of minority for special resolutions, the activist, the people are now being required to vote, the coming of shareholder advisory services. I think the whole ecosystem is coming by which, minority investors now have a say, they're relevant, and they drive valuation. I think the corporate governance in India has improved dramatically, in my opinion.
Oh, so,
Amal, I would
Amal,
like to add here,
yeah.
in the evening earlier, when people used to have a drink and discuss spicy matters, everybody's discussion was that what is the Swiss balance account of this entrepreneur? Today, the discussion is what is the market cap of this entrepreneur? And the market is saying that you get governance and you get valuation by the razor of the sword. If you don't have good governance, market's not going to give. That is a change. And also to
Excellent.
the
So,
earlier point, I would like to point out to you,
sure.
maybe there have been some mistakes, but it was very right to persecute corporate India for their misdeeds.
Okay.
Right?
Yeah.
I know thousands of entrepreneurs who live in bloody $20 million houses and still don't pay the banks. My
Agreed.
friend Mr. Damani has created a 2 lakh crore market cap company. Nobody persecutes him. Nobody is persecuting the house of Tatas. Nobody is persecuting the house of Mahindras. So those who are, my father used to say, be afraid of your deeds. Don't be afraid of anything else. So those who have done the right deeds need not be afraid of anything.
Thanks,
So
Rakesh.
instead of pointing out to the government that they're persecuting people, if you don't follow the law and your governance is not right, you deserve to be persecuted. That is
Agreed.
that is a society. Just
Fair
because you're
enough.
rich and powerful doesn't mean all your acts have to be looked through.
Fair enough.
And,
So,
and if I may add just one point on this, I think whatever people may say about this, I think the reality that in this government, even the biggest entrepreneurs have been taken to task. So I think you got to give the credit to the government for that they've allowed it. I think it's very rare, if you see the history of Indian politics, that so many large, powerful entrepreneurs would have been taken to task with what has happened in the last 3 to 4 years.
a question to both of you. Mr. Jhunjhanwala, you tell us first. Now, we are talking about high growth. CEA spoke about of course, definitely high growth in 2022 because of base effect, but even beyond that, not 5%, 7% growth he's talking about. And you also are talking about apprehensive about higher inflation. And this combination actually theoretically is good for the equity market, isn't that, Mr. Jhunjhanwala?
No, reasonable inflation is good for the equity markets. I mean, 4 to 6% inflation is very healthy for the economy also. But inflation beyond 5-6%, I think, is not good at all.
Okay.
We cannot. And I see no reason if we have productivity gains, that inflation should go up. Inflation, if we can control inflation, not only by interest rates or by lower commodity price, but also by productivity. And the crux to India's future growth is going to be productivity and good policy.
So, given a choice, if I ask you, Mr. Jhunjhanwala, what would be the interest rate? I mean, how should RBI approach the interest rate at this point of time as the growth picks up? What do you think we should be slow in raising the rates? What do you say?
I mean, see, I'm no economist. So what I feel is that up to September, even at the cost of some inflation, we should not allow interest rates to go up. Beyond that, we should follow the required monetary policy, whatever is needed.
Okay. Akash, on both the questions.
Yeah, no, I think I would agree with Rakesh in the sense that, a little bit of inflation is good. I mean, if you look at globally, right? I mean, you have like a U-shaped curve for multiples linked to inflation. Too low inflation is bad for multiples. Too high inflation is bad for multiples. So I think in fact, even in the US, I think it's I think it's 2 to 3%, which is the ideal inflation number for multiples in the US. I think India probably inflation is somewhere 4-5% is 4 to 6%, which is what the RBI target is probably fine. So I think and also the reality obviously is that higher, as long as inflation doesn't go berserk, but it's like 5-6% or 4-5%, it leads to higher nominal GDP growth. And obviously the biggest predictor of corporate earnings growth ultimately is nominal GDP. So if you have higher nominal GDP, like you're going to have outstanding earnings growth this coming financial year because you're going to have nominal GDP growth of 17-18%. So you will have you'll have 30-40% earnings growth because of that. So as long as inflation doesn't go out of control, a certain level is fine. I agree with Rakesh totally. It's good for the banks. It's good for corporate earnings. There's money illusion to a certain extent. And second question on interest rates. Yeah, I mean, I agree with Rakesh that I think the economy is just starting to gain momentum. The confidence is trying to come back. You don't want to short circuit that now with suddenly starting to raise rates and creating doubt and confusion in entrepreneurs' mind. I mean, whenever we talk to industrialists, all those guys who are announcing big capex plans, they say the biggest reason they're doing it now is because cost of capital has come down so dramatically. Like Mr. Birla also mentioned in the Kota conference, that I've green-lighted $2.5 billion of investment across the group because interest rates are low, and I can lock in 5-year, 10-year capital at 6-7% type of rate interest rates. If that number starts rising, then you could have people again pulling back on investment and stuff like that. So let the momentum start, and then you can you need to get the momentum. You have to regain momentum basically.
Thanks, Akash. This is a 7
I
round.
would like to point out, Tamal, is that I think we should recast the the content of the various items in our inflation index, because they are made for a time when food was a very big part of every Indian's consumption, and now food as a part of the consumption is coming down as we are gaining prosperity, and food prices are very, very volatile, especially vegetables and fruits. So I think we need to recast the inflation analysis to
Absolutely.
more reflect India's present consumption trends. And we need to recast them every 2-3 years because if we have fast prosperity, the typical consumption palette of every Indian will change.
No, absolutely, Mr. Jhunjhanwala. We in fact discussed this with CEA, how food is 50% weightage within the CEA.
And very
Now,
violent, very fluctuates. It fluctuates like anything.
yes. Now, Akash, we had 7 rounds, and on every occasion you agree with Rakesh. So I have a sneaky feeling that you discussed among both of you that
No, we are friends. Right?
whatever is your friends, but
Mr. Bandhopadhyay, you will not find two independent thinkers and people of conviction than me and Akash.
okay.
If you see our portfolio, nothing is common mostly.
Okay, let me see. Let me see on this question. It's a general question to both of you, and I'll ask Akash first because then if Rakesh says, Akash will say I agree with Rakesh. So Akash first, he said, do you think that the way we approach taxation is an issue for the investors? Because the long-term capital gain, then short-term capital gain, then STP, and then dividend tax at the hands of the corporations, and now dividends for the receivers. We keep on changing and experimenting. So is it an issue as an investors? What's your take on this? First you say, then I will, Mr. Jhunjhanwala.
I mean, I would have preferred that they didn't bring back long-term capital gains tax. Even they could have extended the definition to 3 years instead of 1 year if they wanted, because we are long-term investors, or they should open up a bigger gap between long-term and short-term. But so yeah, I think I would ideally prefer go back to zero long-term capital gains tax. I think it makes our life far simpler. As a fund, it's very complicated to keep accruing for short-term, long-term capital gain tax and stuff like that. I think also I think you were in a situation where you had a very attractive environment for investors where you didn't have tax on dividends, you didn't have capital gains tax. Maybe that would be ideal, but maybe given the socio-economic construct of India, given our per capita GDP, given the need of resources, that may not be sustainable. So I have no problem with short-term capital gains tax, and probably dividend tax. You could have a concessional rate, maybe not link it to income. But personally, I would have preferred them not bringing back long-term capital gains. I think that does also, if I may ask also a point, that does put India at a disadvantage from an institutional investor perspective. We have only institutional investors as our clients, endowments, family offices, foundations. They don't pay tax in any other jurisdiction in the world. So this is a sore point for them, that we are tax free in the US. We don't pay, so why are we paying tax here? So it's a little bit of a pain point for them.
Over to you, sir. Rakesh.
There are 2 points of question. I think the changes have climaxed. I don't think there are going to be many changes in the taxation laws as applicable to the investments, I think, in the near future. And second thing is, sir, I'm not an international investor. I'm not allowed to, and I don't want to. So I'm used to paying taxes, unlike Akash's clients. So I find the present regime quite reasonable. Of course, I would be happy if I, didn't have to pay any tax. But as he said, seeing the socio-economic conditions, I think the tax levels on the stock market are quite reasonable.
So first time I hear that on the 8th round there is some kind of difference between your approach and your thinking. Now Rakesh sir, tell me, say if you look at the Nifty 50 and I go back 10 years, 12 years back, 2008, 9 and all, many of the companies, I would not like to name them, just vanished. Now, when you look at Nifty 50 now today, do you have similar apprehensions that 5 years, 10 years down the line, will many of them won't be there?
I don't know whether it will be owned or not be there, but in the worldwide, in all indexes, companies are changed. I think the Dow until now had only one company which was there for 100 years, which was GE Electric. Even that is
Yes.
out of the Dow now. So change, if you look at the Sensex in 1990 and look at the Sensex today, you will be shocked. There are not more than 2-3 companies who have lasted for the 30 years in the Sensex. And I don't know of any Nifty or Sensex company which has vanished. I mean, they're not performing well, that is different from being vanished. They're not penny companies. So those they are not doing well, but that is the nature of the animal. And change of the constituents of the index is a worldwide phenomenon, so nothing new. And now, as time is progressing, one thing that is changing in investment is the short life cycle of companies and the volatility in performance. That is becoming more apparent with the day.
And Tamal, if I may add to that also that question, I think one of the other reasons why we are also increasingly getting more and more optimistic on India longer term also is the huge what's going on, which Rakesh is also very active in the whole what is happening in the startup ecosystem in India. I think in the next 12 to 24 months, you're going to see at least 30 to 35 unicorns, not just technology, but other companies. Like I think Rakesh is invested in Star Health, that also I think will come for listing, and various high quality companies will come for listing in the next 1 to 2 years. And I think, in my opinion, this is where the next bunch of really genuine world-class companies for India are going to come. For India is finally, you're going to see this ecosystem from venture capital, PE funded, first generation entrepreneurs, high quality governance. They're not going to come from, in old Indian industrial house listing another company. I mean, some of that may happen, but the next bunch of real world-class Indian companies are going to come through the way it happens in the US. They'll be funded, they'll be professionals, they'll be first generation entrepreneurs, world-class governance, business models, and and the way they're set up and the way they do business. And I think this is a huge positive for the Indian market. To broaden the markets, increase depth and diversity. And India has always been a stock pickers market. It'll become even more a stock pickers market because so many new world-class companies will come.
And I would like to add here, Tamal, for me as an Indian and for us as a society, we should feel proud that this is all first generation wealth. In a so-called unequal society, it is the new aspirants who are creating wealth.
Absolutely.
So you see on India, that is not this is India is this, India is crony capitalism, India is this. Sir, first generation entrepreneurs who came from nowhere are creating the wealth. That is what Akash is saying. That makes me proud as an Indian and should make every Indian society proud.
Yeah, no, he's 100% right. If you look at, we've started looking at this space a little bit now. Look at the companies here; they're all IIT engineers, MBAs, all studied in India, all worked in India, and none of them have wealth. They all first generation.
And Mr. Tamal Bandhopadhyay, I'm happy to inform you that my return on my unlisted portfolio is greater than my return on my listed portfolio.
Yes,
there also I have long investments of 10, 12 years.
Great
But the
to
returns,
hear that. Yeah, but tell us, both of you, a bit short probably. That IPO frenzy. Now every day there are so many companies are going for listing, and then the number of subscription. And do you see this sort of that so-called irrational exuberance? Is this catching on, or is it the new normal? Akash and
it was catching on, but it is getting corrected. Two of them have already listed. I think beyond the issue price. I think Anup led some Razak company and Kalyan Jewelers. So one or two accidents, more like this, and this, I agree there was irrational exuberance. The exuberance will correct itself. The markets are getting in one way, they have self-correcting mechanisms.
Yeah. No, I agree. I think the valuation expectations in the IPO market have gone overboard. Companies were asking for all types of valuations, 40 times, 50 times financial year 23 earnings and stuff like that.
100 times.
Yeah, okay, whatever time. So I think that as you need already 2-3 of the issues have not done well. Another 2-3 will not do well. Automatically, all the valuation expectation will come back to more normalized levels. So I think that I'm not too worried about that. And it's not that big. It's not like the entire effort, energy, everything is in that area. It's not big enough to to think that the whole market is going to corrupt the market or something like that. I don't think so, at least.
Okay, one question to both of you, and Mr. Jhunjhanwala, you are first. But a couple of years back, we started talking about that Indians, the local investors, they are driving the market. But now, the past 1 year, you look at it, it's all over the place. FII, record flow, and if you see the equity flow into the mutual fund has been negative for months. So, is it a structural change for the market, sir? Rakesh, first you.
So if Indians don't want to invest, what can we do? And I think negative returns, negative flows of mutual funds is over. I think March will be a positive month. And I think, I have invested all my wealth into equity from 1985. I don't know why Indians don't want to invest, right? And there is no option, they will come. When market goes up, they don't participate. Then uncle comes, then auntie comes, then nephew comes, then father comes, everybody will come. बढ़ता हुआ बाजार और जलती हुई सिगरेट छोड़ना बहुत मुश्किल है. Mr. Bandhopadhyay, I don't know whether you're a smoker or not, but क्या बोलते हैं कि बढ़ता हुआ बाजार और जलती हुई सिगरेट छोड़ना बहुत मुश्किल है सर. सब आएंगे, पिताजी भी आएंगे, नानाजी भी आएंगे, दादाजी भी आएंगे, बस थोड़ा समय और अंग्रेज आते ही जाएंगे.
Okay, Akash.
Yeah, no, I'll address the global point. I think the domestic point Rakesh has addressed. Globally, I do believe that there's still a healthy level of skepticism, which is good on India. There are enough people who still believe that India can't grow more than 5%, which is a good thing, because these are the people you want who will eventually convert if we are right and India does accelerate, and people will come off the bench and come into India. The reality is this, in my view. The world is fun. If you look at what's happening in the West, the world is fun. Forget this next 12, 18 months, but otherwise, the world is short of growth. There is excess savings, there's a lack of growth opportunities. If Rakesh and me are right, that India has turned a corner and is now accelerating through policy reform, through demographics, through various things we've all talked about, they will come because you have world-class companies, you will have hopefully a strong economic growth. You're starting at a point of profit share of GDP at a 30-year low, and you have good companies. So money will come. And the reality, yeah, exactly. And the reality also, if you look at the emerging market index, there are only 5 markets which matter. There's China, there's South Korea, there's Taiwan, there's India, and there's Brazil. That's it. That is 80% of the MSCI index, 85% of the MSCI index. So frankly, the rest of
इतना नहीं बोलेंगे, इसको बोलेगा कि 20,000 और 25,000 और 30,000 की निफ्टी में भी लोग चाहिए ना, अभी आ जाएंगे तो फिर वहां कौन आएगा? 20,000, 20,000, 30,000 nifty, we need buyers. No, if all of them come now, who will come at those prices?
He's saying that, not me, but yes.
I'll come to that later. We have this, but yeah, as you rightly said, Mr. Jhunjhanwala, that Nana, Nani, everybody will come. Actually, they have already started coming. If you see during the COVID time, the number of individual demat accounts have gone up. They are not exactly Robin Hood.
It is like rain in Bombay in April. Monsoon is in June, sir. This is like rain in April.
So tell us, is it, they are not exactly Robin Hood investors, but they are entering the market directly. So Mr. Jhunjhanwala, is it again showing a structural change? We will see exactly what you are saying, that Nana, Nani, uncle, auntie, the Dada, everybody will be in the market.
But that is the nature that is the animal of the markets. पहले किसको लेना नहीं है, फिर किसको बेचना नहीं है. In 2002, nobody wanted to buy. In 2008, nobody wanted to sell. That is, this is history. No technology is going to change unless human behaviors change. That is the process. Recognize it. Don't comment on it. Take advantage of it.
So Akash, this retailization of equity market, is this now the new normal?
I'm not sure retailization per se. I mean, there will
not
be some
not in terms of fund flow, but in terms of numbers. The number of demat accounts which got opened in the past 1 year or 14 months probably had not been done for the past 5 years.
You look at the proportion of adult population in India. Look at the proportion of adult population in India and see the number of demat accounts compared to the proportion of adult population in this country. It's not more than 2%.
Akash?
Yeah, no, and also I think given our demographics and given the percentage of young population and given the onset of digital technology, it is to be expected that more retail participation will happen. I mean, it may come through mutual fund, may come directly. I mean, I'm not, frankly, I don't have enough of a grip to understand. I think retail participation will increase. I don't have enough of a grip of touch to feel that is it excess right now. I don't think it's excess because the numbers are not that berserk or anything like that. But it's only to be expected. But I think the trend towards financial savings in India rising is inevitable. That is, you can't, that's not going to change. Given where we are, given demographics, given per capita GDP, given the mix of savings, where the savings are today in physical versus financial, within financial, in bank deposits. So I think that's a long-term trend. Now, if how much we retail, mutual fund, that frankly I don't have enough a grip on. But I think the trend towards financialization of savings is a long-term, very, very secular long-term trend.
Thanks. We could actually we could go for next 3 hours, but I'm not very sure whether you have lunch. So I'll stick to 3 more questions. Little micro, but no stocks, because this is not for stock pickers. This is for those who are investors in the market in the larger sense of the term. So Rakesh sir.
I don't advise anybody to talk about stocks except my wife.
No. So Rakesh sir, tell me, which are the sectors for you, which are the sectors to bet on and which are the sectors to avoid?
See, I
right now?
a very long goal, right? So every every dish in the buffet is going to have its time, right? So everything is going to do well, but I think at the moment the cyclicals, the infrastructure, the public sector banks, the most battered stocks, as I keep repeated saying, are the one where the opportunities lie.
Anything to avoid?
Avoid
Any
companies-
sector to avoid? Huh?
In
Sorry?
investment, avoid companies who don't have good corporate governance for long-term gain.
Akash, which sectors to bet on, which sector to avoid?
I mean, Tamal, the sector is not something we get into. I mean, because we are try to be much more stock specific. So I think, frankly, the opportunities across sectors. I think the question is to find where there's change. Either companies doing something, gaining market share, benefiting from formalizing. I mean, there are various long-term trends in India which we've talked about, which I think companies will benefit from. So I mean, there's no specific sector we're looking at or not looking at or anything like that. It's much more company specific, frankly.
Okay. One question, this is the last but one question. Again, Rakesh sir, with you starting. When you pick a stock, right, now I'm getting to stock, but not which stock. When you pick a stock, which are the 3 important things that you look for? Is it governance? Is it management? Is it business model? What comes first? What's second? What third? And anything else?
First comes opportunity. I want to be in a company where the opportunity, I mean the runway for growth, the external market. I mean, if I give an example of Titan, how large is the jewelry market in India? How is it going and how much percent of it is organized? So that gives me the kind of growth Tanishq can have. So first opportunity, then people, and then governance. And then I would add technology or the ability to change through circumstances. And I think what is very important now is also frugality. I mean, I like frugal companies. DMart and Indigo are example of very frugal companies. Mr. Damani is very careful of every 1 rupee that he will spend for his company. And also, what is very important is patience. See, growth is a process. You cannot sidestep it. And out of 100 who try to sidestep it, 95 fail. Right? So growth is a process. You got to be patient. And if the finishing line is not tomorrow, then I've learned from the hare and the tortoise always wins. So I think these are the broad principles on which I would evaluate a company.
Absolutely. Akash?
No, very similar. I mean, I think India is a market where there is
Even saying agreeing with me, yaar. Say something different. He doesn't like you agreeing with me.
But this way, they are different path. This is the same thing. I mean, this is like, you could ask something more controversial. This is like very standard. All of us are going to say the same similar things. Yeah, which is we all look at similar things. We may come a different conclusion of what to buy, but the approach is not very different.
No, the thing with Rakesh added, which we don't discuss. We all talk about governance. He said the frugality, and he's picked up 2 companies. The cost consciousness, and also the innovations, the flexibility. So, anything else we are missing out from companies?
No, I think also we look at, I mean, which is Rakesh is also talking about, which is also, I think, the depth and quality of management. I mean, the governance is one part of it, obviously, which is very critical. But second is also I think everyone, which is a cliche, everyone is going through huge disruption. So every company obviously doesn't have the depth of management, the quality of to handle that type of disruption. So governance is one part of management. Second part is flexibility and ability to handle the disruption which every sector is going through.
Basically is the ability to change.
Yes,
The ability
yes.
to recognize change. And that's what the modern world is about.
Yeah.
Yeah, absolutely. I think, everybody listening, hundreds of audience, and you have real skin in the game. So coming from you, they know what to look for. Now, the final question before I allow you to have your lunch. We have already exceeded the time. And let me see this whether you... Okay, sir, thank you. Now, let me see this whether you choose to disagree. This is, today is March end 2021. 2 years down the line, around the same time, March end, depending on the date, your availability, you again been invited by Ajay Kanwal of Jana Bank to discuss again on the Indian market. At that time, what will be the level of Sensex or Nifty, whatever it is? Rakesh, you will come later. You will have the last word. Because you are where Sensex is and Nifty is. Akash is sitting in Singapore and watching from there. So I'll hear Akash first and then you.
So you're asking me where do I expect the Nifty to be 2 years from now?
2 years down the line, you and Rakesh at the same panel for Jana's 5th anniversary. By the time Jana is listed and in the market. So where do you see the level of indices?
I think market will be up 50%.
So Sensex 75,000.
Whatever I don't know what the Sensex is now, but whatever the number is, I don't track, but up 50% from.
Oh yeah, 75,000.
Yeah, Rakesh, you. Yeah, and anything else? I have not asked you. I should have asked you.
I can predict the direction. I can't predict the depth. But as a rule, I see for the next 4-5 decades, I see the Nifty doubling every 4 to 5 years.
From now on.
From now on. And the only thing I would like to add is that we Indians have no faith in ourselves. We have no recognition of our abilities and our own potentialities. Now, I feel like writing an article, believe in India, my fellow Indians, and profit from the growth that is going to come. What I want to add is, as Indians, as a society, let's have faith and optimism in our own abilities. मरा मुंह लेके जाएगा तो मरे की खबर लाएगा. Right? Why don't we have optimism and faith in ourselves that we can do it? And we will do it. I may not live to see it. Mr. Bandhopadhyay, but I can tell you it's my conviction, and I reserve the right to be wrong, that India will equal China in 25 years in per capita income. The prosperity that is going to come in this country, nobody is recognizing it. At least my visualization of India differs from 99.9%.
We can do it. We will do it.